So in April was kind of the peak tariff uncertainty period. That's when markets really had to freak out because some of these very high levels of tariffs are placed. And if you look at Trump's economic advisor, Stephen Myron, he wrote a paper in March 2024 that talked about how to kind of rebalance trade. And one of the assumptions that they had was that during the tariff negotiation process, it would strengthen the dollar, which would offset some of the tariffs and also give the U.S. more negotiating power. That hasn't played out. We've had a weaker dollar during the tariff negotiation period. Um, and overall, I think the negotiations have been more fraught than they expected. They've had to kind of back off some of the more draconian things. A lot of those are still ongoing, so we don't know where this is going to land. So far, tariff revenue has increased, but even with the increased tariff revenue, deficits are still very large. And so it's not although I wouldn't call it completely immaterial. It is certainly a smaller factor than the overall structural trends that we just talked about. So you could potentially get, 100 or 200 or maybe even 300 billion in additional revenue in a given year. You're up against like a 2 trillion annualized deficit. So around the margins, you can affect it, but that's still, it's still a background thing to deal with. It's more about whether or not a given industry is hit hard. And unfortunately, one of the ways it's played out is that, the tariffs go on companies and then some of the really big ones get exemptions. So it kind of like the middle and the smaller companies are the ones that end up getting stuck with it. That's how a lot of government programs often end up operating. So yeah, a lot of that's still ongoing. It certainly impacts industries, even if on a macro sense, it doesn't really too much affect the fiscal dominance thesis, other than around the margins. Um, there has been some delays in the current negotiation, but then there's also increased rhetoric around it. During the sell-off that occurred around April, that reduced the administration's negotiating position, but the subsequent rebound throughout late April, May, and June, and now into July. So the fact that the S&P 500 is at new highs, the fact that the bond market's less volatile than it was back then, that does give the administration more, stronger position to try another round of tough negotiations. So I wouldn't be surprised that we entered another period of turmoil here to kind of see all these different entities and where they're going to, negotiate with each other.